This video is by request of someone on my Facebook page requesting a video, so here it goes. They wanted to know, or they asked about having patience and understanding the difference between Bitcoin and stocks. So I'm going to do the second part of that question first. What is the difference between Bitcoin and stocks or bonds or other investments? Well, first of all, it's not like a bond. It's not like you're borrowing money for, X% interest. So it's not like a bond at all. But the question, of course, is Bitcoin versus stocks. Okay. So the biggest difference, and I'm going to just, this is all off the top of my head, but the biggest difference is Bitcoin represents a winner-take-all category of money, and stocks represent a best effort to create value in a specific category. So there's actually a huge difference with regard to risk because, for example, with Facebook and MySpace and all of that, if you had an account on MySpace and then Facebook came along, there was no switching cost, literally zero switching cost to switch from MySpace to Facebook. In fact, you could have 5, 10, 20 different social networks running on your computer at a time, and it didn't cost you anything. Bitcoin and the industry of money is very different because you can only own one asset that represents the same value. So in the case of social media or most other products or services, you don't have to exchange. For example, if MySpace required you to turn off your MySpace login in order to get a Facebook login, or Facebook required you to turn off your Facebook login to get a Twitter login, the switching cost would be very high, and it would be very hard for new technologies to enter the market or for there to be more than one technology. In my case, I have a Twitter account, I have a Facebook account, I have an Instagram account that I don't really use. But anyway, so the category of money is very different than stocks in that it is winner take all, and you have to exchange one for the other. So all of the money that is in Bitcoin, or virtually all of it, came from people exchanging stuff in the real world for it. They didn't just get Bitcoin for free. They either got it by mining, which burns an amount of electricity equal roughly to the price of getting the Bitcoin, or they exchanged goods and services for it, like labor and effort, or for the vast majority of people, they exchanged US dollars for it or some other fiat currency, meaning a made-up currency. They exchange it for a not made-up currency, which is actually backed by energy and math and cryptography and the largest, most powerful computer network humans have ever built, which is Bitcoin. So in a winner-take-all industry, my conviction level is much higher that it will not be disrupted by new entrants. And if you're worried about that, read the research report by Fidelity entitled Bitcoin First Revisited. It's by Fidelity Digital Assets, one of the largest, Fidelity is one of the largest asset managers in the world, but it's called Fidelity Digital Assets. Their research report is called Bitcoin First Revisited. And in that white paper, which is a super easy read, it's a sort of a medium length read, but it's written for average people. They explain why it is extremely unlikely that any other cryptocurrency or any other technology would take the place of Bitcoin. So as a result of that, the probability of Bitcoin being disrupted in the marketplace is much lower, in my opinion, than any other company. So let's assume Bitcoin didn't exist and I needed to get very high returns off of something. Well, the problem is you're stuck doing it on stocks like the Magnificent Seven. Apple, Amazon, Tesla, Google, Facebook, and a couple others that I'm not immediately remembering. But the problem is each of those has huge risk. So let's take Tesla because Bitcoin, as far as its performance, would have been the closest probably to Tesla as far as the certain of the, sort of upsides, behavior patterns, that sort of thing. But the problem with Tesla is you have massive key man risk, meaning what if something happens to Elon Musk? There is massive risk around the founder of Tesla, which is Elon Musk. What if he gets hit by a bus or, who knows what? Okay, so you also have huge risk that who's to say that Tesla is going to win the electric car market? Maybe there will be some new upstart that becomes competitive in the electric car market. We don't know. There's execution risk, which is what if the team that Elon Musk hires just isn't able to get it done, get the job done the way they have in the past. There's just all these risks associated with Tesla that would make me very reluctant to put more than, let's say, 10% of my liquid assets in Tesla. Now I have 96% of my liquid assets in Bitcoin. So obviously massive, I've got, almost 20 times more Bitcoin than all of my other liquid assets combined. Now, why am I comfortable doing that? The answer is because Bitcoin does not have key man risk or key leader risk. We don't know who invented Bitcoin. We just don't know. So it doesn't matter who they are or where they are or even if they're still alive, because it just doesn't matter. There's no execution risk because it's a decentralized protocol. So, for example, TCP/IP, which is the protocol that runs the internet, we don't have to worry about TCP/IP not working hard, right? I mean, it's a protocol. It's going to do exactly what it's programmed to do, and it's going to do it forever. Now, there's not a way to invest in TCP/IP. There is a way to invest in Bitcoin. So with protocols and technologies like Bitcoin, you don't have execution risk. You don't have what's called key man, because people get key man insurance, which is basically insurance that nothing bad happens to the person in charge. You don't have those risks of a single leader. You don't have execution risk. I don't think you have anywhere close to the danger of market disruption risk that you do have with technologies. So there's just a bunch of reasons that I think in some ways Bitcoin is similar to stocks, but in other ways it is radically a safer bet than stocks, which again is why I'm comfortable with a 96% exposure of liquid assets as compared to any stock, even the highest quality stock. I would be, even my extremely high risk tolerance, I would have a very hard time putting more than, let's say, 10% of my liquid assets in any one stock, even if it was a stock I had incredibly high conviction about, just because, again, it has all these risks that Bitcoin doesn't have, just massive risks that Bitcoin doesn't have. So that's the first answer. Is the biggest difference is that the risk reward in the case of Bitcoin, I think, is massively lopsided in favor of reward rather than risk, as compared to investing in stocks, where I think the risk is much more balanced, meaning if you want a high return, you're going to have to take a lot of risk and a lot of downside, and I just don't see that the same way with Bitcoin, at least in the medium and long term. Obviously, in the short term, the price can go through price corrections. I just think Bitcoin always bounces back, and it always bounces back faster than basically anything else. Okay, so second, patience to hold it. That is the same with every investment. Every investment goes up and down. The best thing you can do is allocate as much capital based on your level of research and commitment and understanding, and then just don't check it. The more you check it, the more you're going to be stressed out by it. Now, in the case of somebody like me, I check the price of Bitcoin probably 40 times a day. And that's because, I feel like in some ways I'm checking it on behalf of a lot of other people who assume that if something's wrong, I'm going to do a Facebook video about it. So nothing's ever wrong with Bitcoin, but it's just, if I'm into something, I'm all in, and I've been all into Bitcoin for many years now. And so, why not check it a gazillion times a day and try to figure out everything I possibly can about why the price moves, where it's going, all that sort of stuff. So, but for most investments, you're better off buying it and forgetting about it. If checking the price of something makes you want to sell it, especially in the case of Bitcoin, then just don't check the price, because you're much better off being happy at some point later when you check and your investment's way up. You're way better off by that than if you're obsessively compulsively checking the price and then constantly wanting to sell because you're stressed out. So anyway, patience is, my advice never changes, which is buy as much Bitcoin as you possibly can, hold it for as long as conceivably possible, and, I think you'll be very glad you did. So that's my quick recap of how Bitcoin's different than stocks. There's a bunch of different reasons, but I am running out of time to record my last video this morning, and the other reasons would require more brain power and more articulation to capture all of the little nuances of how Bitcoin is different than a stock. For example, stocks only typically trade during business hours. Bitcoin trades 24/7. So that means stocks are trading 19% of the time. That means Bitcoin trades 100% of the time. Also with stocks, there's no way to spin the stock. You can't get a debit card that's tied to the S&P 500 that allows you to spin that balance as needed. In the case of Bitcoin, obviously you can get the Coinbase debit card, which I have, and I buy everything with it. And that means it allows me to convert US dollars into Bitcoin that I need to spend in the near to medium term. But it allows me to hold it in the form of Bitcoin rather than having to liquidate another asset to create cash and then use that cash to buy stuff. So there's a bunch of, other assets were not intended to be money. Bitcoin is, so you could actually use it as money because it is money. In the near term with the Coinbase debit card, and the long term with technologies like the Bitcoin Lightning Network. A lot of differences between Bitcoin and stocks, but for most people, their experience will be similar in that both stocks and Bitcoin will go up and down. Sometimes they will go up and down for reasons that are not easy to explain. Both of them require a lot of patience and conviction to hold. And I think probably the biggest difference is just that I think the risk-reward trade-off in favor of Bitcoin is far larger than any other stock, than any stock or even group of stocks. And therefore, my comfort level with a massively, massively, massively higher allocation as compared to what I would ever feel comfortable putting in any stock or basket of stocks. So that's why in my case I am not diversified hardly at all, because 96% of my liquid net worth is in Bitcoin. So I would never feel comfortable with that level of concentration in a stock. Again, the highest I would probably go for a stock is maybe 5 or 10% versus Bitcoin, where I'm at 96% of my liquid net worth, which is like 9 or 18 times higher. So anyway, I hope that helps. And if I think of other things, I'll try to cover them. Have a great day, everyone. Thanks.